Hello, everyone. Welcome to another lovely educative episode with J Forest House. I am your host for today, JFX, and I will be educating you guys today on the history of trading and how we got the foreign exchange market, which we know as Forex today. Okay, so a lot of people have this mindset that trading dated back to the 18th centuries, and this is very true. Okay, but the modern day trading which we're doing today, which you have on your MT4 or your system, has a history. Okay, it's a job because it has a history. It dates back to you literally have brokers, you have the poor firms, and you see this evolving over time. This should tell you that it started from somewhere. Okay, so the reason why you don't really understand trading properly is because you don't know the history and the basics of how this whole system started. Okay, you have to understand how it works, where it came from, and what were the basic dynamics within trading that got complex over time. Because the evolution brought a lot of system into the game that's changed, or we can say um, developed over time to an even more complex, um, meaningless system. All right, let me put it that way. So today I'm going to be educating you guys a little bit on how this whole system happened and what um started the whole system we know as forex trading today. Okay, so forex trading can, the early forex trading actually can date back to the ancient times when people used to do exchange in goods and services around the borders, back then when we had kingdoms and all. But however, the modern day trading right now, this was when the Bretton Woods system collapsed, and this led to adoption of a system, the floating exchange system, which we have today. This system, which is decentralized, which you have on your system, a more dynamic system. But the shift to the digital world, which is the digital forex trading we have today, took place in the 1990s. Okay, this was an advanced electronic system which came in with the help of the brokers and some other organizations which took advantage of the new economy system which was introduced. Right, so if you go into details of the Bretton Woods system, you would understand that it was a system that involved histories of the World War I, World War II, the agreement between countries, and basically how the economies was run back then. All right. So, and this shift took place, and the technology advancement allowed traders to execute transactions electronically. All right. This signifies a method of which you can now trade on your phone. This you have on your phone, and then brought we, the retail traders, who don't really have funds, or big institutions to back us up, into the system. Okay, so today the forex market is largely traded globally, by different religion, different countries, different continents, and we will continue to prevail in multiple systems and new developments. Like you have the Profim today. The Profims were not here earlier. Along the way this evolved into that, and you need to understand that this little history can help you understand how and why the market is actually moving. All right, because for you to be able to predict this market, today, for you to be able to get where you have your entry and where you have your stop loss, all right, you need to be able to understand where the market is actually coming from. Okay, you need to understand why the market is going to be reacting to this point and why it's going to be dropping from here. All right, so most of the time you need to understand that for you to trade this, it has to be happening on a pair. I know you all know the word a pair. A pair is the combination of two currencies, because you can't trade just USD, right? You have the Euro USD. So the Euro USD together is a pair. All right. Now the Bison Hood system, the primary goal was to create a stable international monetary framework. All right. This was an economic system. This was to help the economy in that time because of the World War II. The key point of this was to have a fixed exchange rate, the international monetary funds and stuff like that. All right. So these were the basic systems of economy back then. All right. This led to what you have today on your chart. So if you're a forex trader, yes, this is a career. All right. So if you have been joking with this, you have just been gambling. You have not been trading. Right. You have not been trading. Traders are literal job. It's a literal job. Like you have to know what you're doing. You are assigned a certain task to find an entry point and an exit point to invest your money in. Right. So if you have been joking with this, you have just been wasting your time. You will keep losing until you start taking trading very, very serious, or you would have to stop. You can go and ask those who have been traders in the past. It's either you're going to keep losing or you're going to let yourself start learning the truth so you can progress. Right. So if you're new to the channel, you can subscribe and you will keep getting videos like this along the way. So you have to understand how trading works. You can join us on Telegram, where I share analysis daily to also guide you on um, where and directions you could be expecting the market from. And then you can also join us on Instagram, where I share shorter educative videos that can help you understand price actions and candlesticks. Okay. Now, this entire system, which we have, let's say, let me break down the buy stand hold system again. I believe there are informations about this you can find online, or you can go and research about it. The project was where more of a system where everyone agrees to use a common currency, which was the US dollar. All right, and to tie this each US dollar to go. Now, this helps to keep a stable and like a share agreement of how much each country's money is going to be worth. Well, this system did change later on in the 1970s, where the new system was adopted. Okay, so this was the old system. Then we didn't have this MT4 and MT5. I mean, basically, retail traders had no business with any of those stuff happening then. It was more of the big guys, right? So, but following the end of this whole system in 1971, the world transformed into a floating exchange rate system, where country values were determined by market forces, which we have the buying and the selling today. So after the system was introduced, it became more flexible, but also became very, very complex because traders started finding it difficult to understand this entire economical system because they were never in it in the first place. A lot of people who were gamblers came into the system and started using big money to try and make big money. So having misconceptions led to the birth of this kind of forex trading we have today. But a lot of people have been able to make it out. We have historical figures who have been able to help us understand this trading. People like ICT, who has created a very, very simplified technical method that helps you understand candlesticks. We have Wyckoff, who developed a technical method over time, who also helps us to understand the trading system properly. All right, now for us to access the market as retailers, this was where the brokers came in. Right, the broker played this role to help us access the market, giving us leverage and margin in trading. Right, as you know, you need leverage to be able to make this work. This is trading. You invest your money. So the aspect of where leverage comes in is that you need money, right? And we don't have that level of money to be able to influence this market, all right? So you need money to be able to participate in this market, but we don't have that. So the broker offers some certain leverage that allows traders, which is you and I, to control larger positions with smaller capitals, which is what we have. Okay, so these agreements, which are the terms and conditions within whichever broker you're using, helps you to access the market and be able to trade it. But then we have new facilities which were introduced a long time, which you have the Profim. The Profim is a new system which is more dynamic than an average broker, but still it's more of the same thing. And as we know, we have the people we call the institutional traders, those we presume to be the smart money traders. Okay. Now, these guys also do use brokers. Okay, they do use brokers. So these are traders that use bigger funds. You have the Wall Street, existing. Those are still traders, but in a more bigger scale. Okay, those are still called brokers. Okay, so the broker often offer risk management tools, including indicators that also helps us to navigate the market, like a stop loss order. All right, so the broker gives us these features using technology to be able to control the market. All right, because if there were no brokers, we won't be able to place stop loss or take profits, stuff like that. These apps and applications are things that made available because of the broker. Right. So the introduction of the online trading platform by Forex Broker really revolutionized, or would I say, evolved the trading industry into what we have today. Along the increase with the access to the internet allowed individuals to trade currencies from the comfort of their home. So basically, this was one of the early milestones retail traders were not having the access to. But today, which these platforms were introduced in, I think, the late 1990s, all right, these platforms were introduced within those period, uh, which made a very, very significant shift from the traditional method that paved way for what we have today, the widely spread Forex exchange market, which everybody is trading. All right, so the market you think is just candlesticks and it's just Quasimodo patterns and all. It's not just that, right? This is literally a logical market, like it's a marketplace. Okay, so for you to be able to be successful in this, you have to understand how this works. You need to know how to identify certain trends, what pairs are called, the meaning of fundamentals, because we have what we call fundamentals. And then you need to know how to make those things. Now, most of you have seen my charts. Majority of them looks magical, but the only reason they do that is because I do know how to use my tools very, very well, and I do know what I'm doing. Okay. So for you to be able to do what I do, you also need to know what you're doing. All right. So you need to stop forcing the market to play along with your Quasimodo pattern. It won't work. You need to know what trading is. And for you to do that, you have to also go through the videos in the YouTube channels and learn. Just take your time and learn the real stuff, because 90% of the time, what is making your trading to fail isn't what you don't know. It's what you actually know wrongly. Majority of you have failed up with internet scammers trying to make you buy their course and stuff like that. But you don't really know what's going on in the charts. All right. Candlesticks are tools, line charts are tools, indicators are tools that helps you to trade. Like there's nothing wrong in using indicators. Nobody said you should stop using indicators. Like they were created, they are mathematical tools that helps you calculate the market. There's nothing wrong in that. Do you understand? If you know how to use them, use them. You're here to make money after all. So for you to know how to do this stuff, you need to start making some shifts, because this is a new year, all right? It's either you're stuck in believing technical analysis moves the market 100% and try and force the market to follow your ICT method, or you start learning. You tell yourself you want to learn the truth about trading, and you actually start learning so you can stop funding the market, because all you're doing is funding the market. All right. So thank you for joining us today. Our next episode, we will be discussing on how to read candlesticks. I'm not talking about dojis and digging graves. No, I'm talking about the actual candlesticks, which the method was originated from Japan as well by a rice seller. All right. So he never had computers either. He never introduce this candlestick we have on our charts today. I don't think he did that way. It was mathematical calculations, understanding the opening and close of the markets, using rice. It wasn't even on price action, Forex, blah, blah, blah. So on the next episode, I would give you guys more details about that, and we would understand more on how to use candlesticks. So you know how to use candlesticks. After that, we'll go into understanding patterns, what are technical methods, and how you can use indicators on your chart. I'm going to also teach you what we call price action, because a lot of you just know what price action is as a word, but you don't really know the meaning. You just know it's price action, but you don't know the meaning. So subscribe if you're new, and I will see you on the next episode. Bye bye.